Hi everyone, I'm back with another video on the elements of financial statements. In my recent videos, I talked about assets in detail, and in this video, I'm going to talk about the rest of the elements of financial statements with examples, right? So I'm going to start off from a liability. So in accounting, liability can be anything that you owe other people and you have to pay off in future, right? So whenever you talk about liability, you should know that there has to be a cash outflow from the business in future, right? So the term in future is actually very important when you try to explain what liability or what asset is. Um, because those relate to the events that will happen in future on the basis of what has happened in the past, right? So if I talk about the liability, you have maybe you have taken off the loan from the bank and then you have to pay that loan in future, right? So you took the loan in the past, but you have to pay off that debt to the bank in future, right? So the term in future becomes very important when you try to explain what liability is or what asset is, right? So likewise, assets, we have the categories of liabilities. We have current liability or non-current liability. So current liability is anything that has to be settled or that has to be paid within a year. So I have a few examples for that, a very generic examples. So we can have a short-term loan payable under current liabilities. So if we have taken a loan from the bank and then we have to pay that loan back to the bank within a year, so that comes under my current liability as short-term loan payable. And what account payable is, if we have bought bulk goods from the creditors, and now we have to pay them back the money that we owe them in future within a year. So that also comes under my current liabilities. And what bank overdraft is that when we use more money that we actually have, so we have to pay the extra money that we used back to the bank. So that also comes under my current liability because we have to pay the extra money that we used within a year, maybe like in 1 month or in 2 months or like maybe in 45 days, depending on the bank terms, right? And then we also have interest payable under the current liability because whenever we get the loan from the bank, they charge us the interest and we have to pay that interest on monthly basis. So on monthly basis means that will come within a year. So that's also my current liability. And then the bills payable. So all the utilities that I use for the month, right? So I have to pay the money against those utilities by the end of the month. So that becomes my payable by the end of the month because I've consumed something that I have to pay to the utility owners in future, right? So in my non-current liabilities, so these are the liabilities that we have to settle for more than 12 months, right? So for that, I can have a long-term payables, a long-term loan payable, right? So if I got a loan from the bank, which is a long-term loan, so I'll have to keep giving the money back to the bank for more than 12 months. So that will come under my non-current liability. So you all would know about the mortgage. So generally, the mortgage time period is actually very long. Like the mortgage can be of 10 years, for 15 years, for even for 30 years, right? So this is the money that you'll have to pay for the 10 hours, for the 10 years straight. So that also comes under your non-current liability, and then the bonds payable. So the bonds, you know, issuing bonds is one of the sources of finances for a company. So a company can issue a bond that you and I can buy, and then company have to give us the money back in future. So that becomes the non-current liability for the company as well. So yeah, these are the very basic examples of liabilities that every accounting student should know and have these on their fingertips, because these are the things that we are going to show on the balance sheet.